Problem 6 is preparing a balance sheet of International Bank Limited. All of these debit and credit balances are given to you that will accordingly go to the assets or to the balance sheet. Okay, and let's see. We're going to solve this problem, figure out all those different places, different items that they go under. All right. So the first one, share capital. I'll go a little faster on this one since we have already discussed the previous problems a lot by now. I think you all know which schedule each one of these go to. Only if where I see a very different type of item, then we can have a discussion on it. Okay. So share capital, we know, goes to schedule 1 under liabilities, under capital and liabilities. Then you have statutory reserve, which goes to schedule 2, reserves and surpluses. We have net profit before appropriations. That means it's the profit of the current year, but before showing the appropriations. So we will put this in a working note and we will calculate what is the profit left after appropriation. Fine. Same way, the profit and loss account will also go in a working note wherein we will calculate previous year's profit. Know that this is the previous year's. Alright, so we will accordingly add up both of these and then see what is the total profit that we get and accordingly use it for appropriations. Alright, then different types of accounts, fixed deposit, savings deposits and current account. Now these will go to, of course, deposits, schedule 3. That means the money kept by people with the bank in the form of fixed and savings deposit. Now what about current accounts? It's given in both columns. You have been given debit balance also and you have been given a credit balance also. Okay. So where does this go? In case of your the debit balance of current account, which is 28.10. This will go under your assets in advances. Okay, the debit balance, like I told you all, goes into advances because we consider that the debit balance is in fact an overdraft. Fine. Okay, so it's like a loan that is given by the bank to that current account holder. This debit balance will go under schedule 9. Okay, whereas the credit balance will go under the deposits itself, that is schedule 3. Okay, so the current accounts credit balance is what has been kept with the bank, okay, by those customers, by those companies, all those business people who have created current accounts, they have kept this money with the bank. Whereas the debit balance is what the a bank has given to the corporates or to the business people in the form of an overdraft. So it is schedule 9. Next is bills payable. We have schedule 5, which is for other liabilities. Okay, bills payable comes under other liabilities. Now cash credits again is a debit balance. They're all mixed up. You have not been given in any particular order as such. So cash credits of debit balance, these will go under advances. These are loans given by the bank to people or short-term loans given to people or business people in the form of cash credits. Next is borrowing from other banks. So any borrowings go under schedule 4. Whether it's borrowings from banks or RBI, they go under schedule 4. It's a liability. Remember 1 to 5 are liabilities. Schedule 1 to 5. Next, we have cash in hand. We have cash with RBI and this will go under schedule 6. So these are our assets. From schedule 6 onwards are assets. Then cash with other banks and the money at call, both of these will go under Schedule 7. Alright. Gold and government securities. We've already looked at this in the previous problem also. Is investments. It will come under 8. Premises and furniture are fixed assets. They will come under Schedule 10. And term loan, which is again given by the bank to its customers, is going to come under Schedule 9. Okay, the types of advances. So very simple problem, except for one or two different adjustments that we have and we are going to look at over here. But other than that, a lot of repetitive type of items that we have seen previously in the problems we have done. Okay, then bills for collection, we know it's a separate item that goes into the balance sheet. Correct? Doesn't get added to any liabilities or assets. Acceptance and endorsements and claims against the bank which are not acknowledged as debt. These type go to contingent liabilities. Depreciation, of course, we know we have to charge it on fixed assets, alright, in Schedule 10. And certain other adjustments, like they have told you how much of the term loans are secured by government guarantees. Okay, this is again, like I said, additional information which you have to show when you write Schedule 9, that so and so is the advances in Schedule 9, term loans are these many. You just have to show that information, that 50% of the term loans are government secured, the others are unsecured. Okay, then 10% of the cash credit is unsecured. Again, more information is given about cash credit as to how much is secured and unsecured. Next one, we have to calculate some reserves. As you know, the RBI makes it compulsory, it mandates the banks to maintain certain reserves like the cash reserve ratio, the statutory liquidity ratio, and so on. And there are certain, it comes up with certain percentages. It has something called a bi-monthly review. Every 2 months, RBI, it holds a meeting, it does a review of its monetary policy, and it changes these ratios. CRR will change, it will become 4%, 4.5, 4.25, or statutory liquidity ratio will be changed, the SLR as we call it. It will go from, let's say, 20, 22, 25 and so on. Okay. So in this case also you have been told that you need to maintain a cash reserve ratio of 3% and liquid reserve ratio of 30%. These are percentages given by the problem itself. Alright. So again, we will accordingly see how these reserves are also calculated and maintained on all of these balances.